Demand is insane. People can't get enough Blackwell. They're just flying off the shelves.
GM, good morning. Welcome to the Milk Road AI Show, the AI podcast that turns Nvidia's $57 billion quarter into investor bedtime reading. I'm your host, Kyle Reedhead, joined by my co-hosts, Duncan and Patrick. And today we are going to discuss, obviously, Nvidia's crazy earnings call from yesterday and what this means for the AI bubble. We'll talk about why we like Google as a full stack AI play and OpenAI's revenue forecast, as well as some of the best charts and data to track to understand where the AI space is going. Before we start, obviously this is still a brand new channel. We've only been going for about 2 weeks here, and so we need your support. If you are watching on YouTube, please subscribe, drop a comment, leave us some feedback, and hit the like button, of course. And if you're on iTunes or Spotify, make sure you subscribe and give us a nice rating. You can leave a comment there as well. That would be amazing. That will help us grow. And if you're leaving a comment, let us know either feedback or guests that you want us to interview that are in the AI investor space. All right, without further ado, let's get started into the show. Duncan, Patrick, how you guys doing?
Good. It's been a big week in news.
Big week.
Feels like people, were freaking out last week about the AI bubble. And I feel like this is what happens when prices start to go down, then people just start to point out all the potential issues, kind of, narrative follows price. But, Nvidia, probably, the most important company or one of the most important companies in the AI space.
Just, in the world.
World just kind of crushed their earnings. And, from a fundamental perspective, things look really good. So, price will get away from fundamentals in overhyped segments and then come back down to earth and maybe drop below and then, kind of follow that trend. But I think on a fundamentals basis, Nvidia, showed that the AI revolution is still very real and
Yeah, so let me give a bit of context and I'll throw it back over to you guys. So Nvidia had their earnings call yesterday. They hit 57 billion in revenue for Q3, which was crazy. I think they beat the expectation. I forget what expectations were, 53 billion or 51 billion, something along those lines. But anyway, you can see the chart we have up on screen here. This is just their data center revenue, and it was a massive jump from Q2. For anyone who listened to the earnings call, it was wild. They just came in and they were like, we are just getting so much demand. They listed off all their numbers and how crazy they were from all different angles. Then they went on for 20 minutes talking about every company, one of their clients, talking about Meta, talking about, RBC, everyone, about how they're all using AI and they're making a shit ton of money off AI. So it was probably the most bullish call you've ever listened to in terms of AI. So it was wild. But what is your guys' take outside of just, obviously the AI bubble continues here? What were your guys' thoughts when you listened to the call, if you've had a chance?
I mean, Patrick, demand is insane. Demand is insane. People can't get enough Blackwell. They're just flying off the shelves. It was really interesting to hear from all of the clients. Meta specifically was seeing increased ad conversion and revenue directly correlated with increasing the size of the recommendation model. So that's always a good trend. When you just spend more money and make it bigger, you earn more. That's kind of the trend that is powering this entire run. It also coincided with a couple big releases on the news side. So Gemini 3 came out 2 days ago, and it's a massive model. The exact parameter count is not public, but reports have it between 7 trillion and 10 trillion parameters, which is just huge. And you have the heads of DeepMind coming out and saying scaling is fully intact. So pre-training, making the models bigger, training them for longer. There was a bit of discussion on whether this trend was going to end, whether it was going to lead to less increases in model performance. And it seems like that is not the case. So you can simply just make the model bigger. You can train it on more data. It will continue to get better. And so that's super good news for NVIDIA. It means that you probably see more and more demand, especially from the frontier models, as they now push the frontier even further, make the models bigger, train them for longer. So the trend is fully intact. I don't really know what else they could have told us yesterday. The show goes on.
On the whole, ad recommendation engine, that has been a business model for a while. And, used to run on kind of the old computing stack, and it was moving over to kind of AI compute. So on the Meta point specifically, this is what Jensen was saying in his podcast with Brad Gershner was basically, these companies who used to use this like CPU based compute in the old world, have a complete like demand to upgrade everything to GPU compute. So like he wouldn't see a slowdown in AI demand for the next 2 years while that transition is going, just like replacing the old style of computing with the new style of computing. And I think like we're just getting more and more evidence towards that it's working for these companies, and demand is still super strong.
There's net new demand to buy GPUs for these like new companies that are building whatever different things using AI. But then what you're saying is there's also, instead of net new, it's like there's the existing compute that's existed for a long time that all has to be shifted over as well. I think there was a third demand that they were talking about on the earnings call. I don't know if you guys remember that at all. I didn't fully grasp it, but there was those two, and there was something else as well. And they basically said all three of these like pillars or whatever you want to call them were in full demand, which was just like, holy shit, this is crazy bullish.
Yeah, it's definitely happening. You have the transformation from CPU compute over to GPU compute. You also have like the transformation of human intelligence and human labor into machine labor and more GPU demand. So
Right.
we're really starting to see that happen. Duncan had said like original ChatGPT, kind of a cute toy, give me a poem. Now it's, summarize this whole thing, go do research, create a PowerPoint, create an Excel spreadsheet. So it's doing real work now. That's the beginning of the trend. Like this has not really accelerated yet, and it's going to. It seems pretty clear to me that this is happening. So I think this can go on for quite a while. Like I don't know how you put an upper limit on the demand for that kind of thing. If it continues to scale, if you can coordinate it well, there's going to be significant disruption.
That was kind of the vibe I got from the call, which was they pointed out so many case studies of companies just starting to use AI and it making such a massive difference on their bottom line or on specific products. And it was like, that's a small subset. And most companies are still not fully integrating this stuff or using it yet, which means, as you just said, it is the beginning of this, not late stage. And all these things are going to need more and more demand and more compute. I mean, so it feels like this thing extends for a lot longer than I think many of us can realize.
There's two things going on where you have AI is very accessible at the beginning. It's very easy for a company to come in and add this as an email summarizer or add this as like a light research agent. They can get some efficiency gains right off the bat from that. But the next level, and where the models are starting to go now, where they can really be super agentic. So OpenAI released a new frontier coding model yesterday. The name is brutal. It's GPT 5.1 Codex Max. And yeah, they said that this thing can run in their internal evals. It ran autonomously, doing an entire programming task for 24 real hours straight. So
wow.
To adopt something like that in your organization, it takes a lot more effort and a lot more management buy-in than an email summarizer. Like you really need to reorchestrate how your company operates around the capabilities. One thing that's been difficult on the enterprise side is that the capabilities are moving so fast that it's hard for these decisions to keep up and for that buy-in to happen, because you almost might as well wait another 6 months rather than jump on the wave now. But the general trend is that hasn't really started yet in the big orgs. It started a little bit on the engineering side with code, because like as we mentioned last week, those guys are a little bit more eager to be on the cutting edge and change their workflow. But when this really starts to impact law firms and medicine and accounting and more white collar work, it takes a while. The demand is really drawn out and there's no limit.
Yeah. I think that's a really important point because, obviously these big tech firms who are on the cutting edge of this stuff, making their own models are implementing it. And I think we've heard like, Google and Microsoft say like 50% of their code is now written by AI. But, most of the old world firms, are very slow to move, and the penetration into them is, probably extremely low, at least from like the anecdotal conversations I've had with people who work at these places. Then the other thing that's happening is they're using their like, a law firm, might have sensitive data, or an accounting firm. So they're going to use like their own internal AI, which, is probably a year or 6 months behind the latest cutting edge models, which, makes a massive difference. Like, the jump from ChatGPT 3 to 4 and 4 to 5 is a huge difference. So there's still just so much, uptake to happen. And I think from like a fundamentals perspective, it's really hard to argue that the demand isn't there. And we're probably just on kind of the edge of it right now.
There's a guy that I really love to read his work, Ethan Mollick. He's a professor at Wharton. He's got a great blog. He's all about the impact of AI in work and in the economy and in business. And he always highlights like a new study comes out, a new paper comes out talking about the impact of AI in the workforce, and it's using GPT 3.5 or GPT 4. And the stuff is 3 years old, and they're already seeing, significant gains from that. The models have just come so far since then. It takes a long time for this to pick up. It takes a long time for academia to pick up and for the papers to be reviewed. So the best is yet to come, if you ask me.
What's the cadence of these new models coming out? You just said there's a bunch that are coming out basically this week. Probably a new one. Was it from OpenAI today or someone else?
Yesterday, yeah.
Yeah. What is it every year? Is it every 6 months? Is that getting faster? What is it typically for those that aren't paying attention?
Yeah, so recently it's been every couple months. After GPT-4, there was like a bit of a lull until 4 Turbo and then 4.0. What we're seeing is the cadence of model releases is increasing. It's not happening like a new iPhone coming out every year. They give you incremental updates of the current generation. So we had so many refreshes of GPT-4.0 to the point where GPT-4.0 was pretty good. And then we had 01 and 03. We had so many launches in that 1.5 year period that it made the release of GPT-5 seem less significant than it was. That's only because we were privy to seeing the incremental steps. It's accelerating. So GPT-5 came out a few months ago. GPT 5.1 came out last week. And now this week we have GPT 5.1 Codex Max, which is also, another big step. The big news this week is obviously all of the labs are doing big drops. Gemini 3 was long hyped. I think we're probably going to see Opus 4.5 today or tomorrow, hopefully some point this week, definitely before the end of the year. And I imagine OpenAI has some goodies in store for us in December. Last year, they did this 12 days of shipmess, where every day for 12 days, they released something new. So it's picking up. And as the GPU build out progresses, as more data centers come online, the labs will be less GPU constrained and they will have more resources to increase the cadence of model launches. So it'll be good.
Can you quantify how much better each model is? So every time they release a new model, is it 2 times better? Is it 3 times, 4 times? Or is it that they're adding on a different feature or thing that it can do that it couldn't before? Any idea?
So there are maybe 10 to 15 benchmarks that all of the labs follow. Some of them are kind of domain specific, like software engineering. Some of them are general expert knowledge, like graduate level problem solving, math, reasoning, stuff like that. Every model launch now is kind of a couple percentage points better than the last on these benchmarks, but the trend is clearly up and to the right. We're now in the territory of like 80, 90% on these super, super hard benchmarks. So a 3% gain in software engineering when you're already at 77, 80% actually translates into like a significant increase in capabilities for users. It's definitely not like a 2x improvement, but the models come out so much faster that the pace is increasing.
Interesting. Let's jump over to OpenAI. I know we had a conversation there. I'm going to pull up a chart that you guys had shared. And we talked last week a little bit about, OpenAI is going to spend, I think, 1.4 trillion they have in commitments for this AI build out. But we mentioned, the revenues, I think, for this year are projected to be like maybe 20 billion, if that. Walk me through your guys' thoughts on this. This is their sort of trend of what we're expected until 2029. But why does this chart matter?
Yeah. So basically, like one of the big things about the whole like AI bubble was this, GPU depreciation issue, which we spoke at length about yesterday, saying like these older GPUs are being like used for longer, and the demand is still insane. That still yet to see how that all plays out. But the other big kind of piece against the whole AI movement on a fundamentals level was this spending commitment versus revenue. So Sam Altman was on the podcast with Brad Gershner. He asked, you guys have 13 billion of revenue this year, and you're supposed to spend 1.4 trillion over the next like 10 years. Like, how do you square that? And Sam had a little bit of a freak out, said like, you can just sell your shares if you want. So people were like, oh, fuck, like this is a massive bubble. And then, since then there's been some good research that's come out on kind of exactly how they plan on doing that. And so this chart is actually from 2024, and the projected revenue for 2025, this ramp already looks insane. And it's going to be, I think Sam said it was going to be over 20 billion in 2025. So almost double what the projections were just last year. So that was like the point of this chart. I think Sam said they want to scale up to 200 billion in 2030. And if you flip to the next chart we have, this is what Altimeter put out after that podcast about their kind of, new revenue forecasts. And I think it just goes into what Patrick and I were saying about how there's just such low penetration of AI into these businesses, and just, still so much to go. And the models are just getting so much better, expanding so many different use cases, that the revenue ramp up here, OpenAI more than doubled their revenue from last year to this year. And if they kind of keep up that pace, then you kind of get into the hundreds and 200s of billions, like pretty quickly, which can then hopefully meet their spending commitments. So obviously when they're at 20 billion today and you hear 1.4 trillion of commitments over the next, 8 years, that is pretty scary. But there is, kind of a lot of different ways, not only from revenue scaling, but, if needed, you could renegotiate some of these contracts, push them out a little bit further. The OpenAI there was some rumors that OpenAI might IPO. You can raise money through debt, IPOing, all these different kind of sources, like bringing on a joint venture partner. And I think like the really key part here is, okay, yeah, OpenAI is a new company, and it's hard to see, maybe like it's hard to imagine them, 10xing their revenue in 4 or 5 years. That's just like a big thing to do. But this whole AI revolution is really backed by the most profitable and largest companies in the world, right? So it's all big tech who's spending this money. And it just feels very unlikely that, first the US government would like let this all crumble and let the biggest companies in the world crumble, but also that kind of these massive companies don't know what they're doing. And yes, there could be maybe a pullback and someone goes bankrupt, but the overwhelming trend still seems like extremely positive. And I think, people get scared when markets go down, but it's really hard to fight the actual fundamentals improvements we're seeing. And then all these new sources of demand, which like, I guess we'll talk about later, but, we're really just seeing, consumer products take off, and that's where a lot of this revenue is coming from. But there's, all the commercial deployments, like different types of models, all these different use cases that still haven't been, fully tapped into yet from a monetization perspective from these labs.
Yeah. I just want to add that even if you hold the models constant, if you don't believe that the models are going to keep getting better, and you don't think that this is going to, significantly upend the way that we do work and change businesses that way, people underappreciate the scale, the behemoth that is like the OpenAI consumer side. 700 million weekly active users, household name. Basically everyone in the world knows what ChatGPT is. Most people have used it. It's quite sticky. People love to use these assistants. They haven't really pulled out all of their tricks on the revenue generation side from consumers. We're going into the holidays. Christmas is around the corner. There will be billions and billions of dollars worth of gifts that are purchased with input from ChatGPT. People saying, what do I get my girlfriend? What do I get my kids? Like, what's a hot game that I can buy for them? Whatever. They're going to be able to squeeze revenue out of that, either through ads. Head of the CEO of applications, might mess up her name, Fiji Simo, was talking about like future revenue opportunities for them on the consumer side. Ads are obviously a very natural way for them to tag this on. If you have you have this habit built from consumers, people using it for every aspect of their life, you're going to be able to squeeze out more than a $20 subscription from them, even in silent ways. You don't have to make them pay up front. It's going to be integrated with e-commerce providers and everything.
Yeah, they barely even touch the surface of even just in like subscription models and things that they can do. Like I just saw they launched something specific for teachers, right? Where all the teachers in a school can now have a similar platform where they can kind of work together to, I don't know what it was all about. I obviously haven't used it, but like they barely even tapped into like enterprise packages and things like that. So there's so many products that they can create here just by using what they currently have and packaging it in different ways and giving different like access to certain aspects of what they have. So like there's so much they can do. And then you think of ads and products that they can create. And it's just like the list of ways to monetize what they have is literally endless. Question outside of OpenAI, what obviously they're going to use some debt, I think, to get to this 1.4 trillion in what was it 3 years or whatever. And so they'll do that at some point, right?
8 years.
8 years. Oh, 8 years. Okay. What about the rest of the market? Is there a lot of debt in this industry already in this build out? Obviously the biggest players like your Googles and Apples, they have so much capital in, just cash that they have on hand. So they can use that or take out debt against that. But outside of that, like, is there a lot of debt in here? Is there a lot of leverage in the AI world currently?
Well, like most of the people funding, like, the immense amount of capex are these companies that are like the most profitable ones in the world. So that is the majority of it. Obviously, the debt is starting to ramp, but it's not just. I think like people, all this stuff about the telecom bubble coming out, where these telecom companies like took on billions of dollars of debt to like lay the fiber, and then nobody used the fiber for a very long time. Whereas with this, it's like, CoreWeave, for instance, their debt is based on contracts they get. So like they get a contract from a company like Microsoft to do compute. Then they take on debt directly related to that contract to then go and buy the GPUs. And it's kind of ridiculous to think like, some of these big tech firms have better credit rating than the US government, which can like print their own money, that like Microsoft isn't going to pay CoreWeave. And obviously there is a lot of kind of, what people say is this like circular financing, which is scary, but that's just kind of like the multiplier effect of the economy. Right. And, when you're talking about these companies that are somewhat intertwined, it's not like money's just getting handed to each other and nothing productive is coming out of it. Right. Like you're having these AI models come out of it, which are extremely productive and a net benefit to all of society and like saving money and time across organizations. So I think that given like the monetization potential is like ready today and it's happening, it's a lot different than, taking on a bunch of debt for something that has no demand and it's not secured by anything.
Right.
Yeah.
You can't really look at like, if you're looking at the debt as an isolated number, it's going to continue to go up. But what you need to look at is debt versus like earnings versus like, or profit from these companies. Because if the earnings and the profit's going up, then the debt can go up too. As long as the percentage of debt versus earnings or profit isn't too much, then you're fine, right? And as long as earnings continue to go up, which we're showing this entire episode so far, is these earnings are just going through the roof, then like debt should go up along with it. That's just natural. That's how any industry works, right? You just can't look at it isolated, I guess, is the key thing. Although who knows, probably at some point it gets too much. It's just kind of how financial markets tend to always work, right?
Yeah. But like I just find it hard to believe that, the biggest companies in the US and the world are going to, essentially blow up because of this.
This isn't crypto.
It's such a real trend. And even if they were like, there's so many different, like the government getting involved. This is like a national security issue at this point. And I just think that there's no way, this trend is so big and going to impact people in so many different ways that it just blows up especially from these companies, right? Like this isn't like the DATs where everyone's looking at them and being like, okay, this is obviously makes no sense. It's like companies in the world that are seeing real productivity improvements from this trend.
Yeah, this isn't a 1-year-old crypto exchange in the Barbados or wherever the heck it was with Sam Bankman-Fried. These are like the most legit companies in the entire world. So it's a bit of a different vibe. Although if there was one person that could do what Sam Bankman-Fried did, but at a higher level, it'd probably be Sam Altman. So that does that scares you a little bit. Let's shift over to Google because some crazy things are happening over here. So first, I think it was on Friday, so it was after our episode last week. Warren Buffett's Berkshire Hathaway, they announced that they put on a position to buy $4.3 billion worth of Google, which is funny because it's right when like Google was at its peak top and everyone was saying AI bubble, and he's still buying billions of dollars. So that kind of, I think shook heads for some people. But before we get into I want to talk about Google as an investment. Before we do, they just launched their new Gemini. And so maybe Patrick, you want to walk us through, what that is and if that's a big deal. And then let's talk about like why you guys think Warren Buffett's buying Google. What's the investment case here?
Sure. On the Gemini side, this model people have been waiting for this for a long time. Gemini 2.5 Pro came out, I think, almost a year ago. It became my daily driver for a while. A lot of people really loved it. And then they kind of slowed down the release schedule. They've been obviously working very hard on this. It's a beast. I've been using it for the last couple of days. It, to me, is a step improvement in like reliability. It also sounds distinct and acts a bit distinct from ChatGPT and Claude. There's rumors, as I mentioned before, that it's a massive model. As you increase the parameter size on the model, you get a bit more nuanced and soulful behavior, which is always cool to see. They also today, just this morning, launched Gemini 3 Pro Image. The names of all of these models are brutal. If you had heard of Nano Banana from a few months ago, this is Nano Banana Pro. I've been playing with it this morning. Yeah, I mean, the names are brutal, but these things are real. So it kind of does a disservice to the whole thing.
Yeah, I do.
I've been playing with Nano Banana Pro this morning, and it's better than any other image model I've ever used for sure. It has reasoning built into it, so it can create preliminary images, reason about it itself, improve it iteratively, can search the web. So you could ask it for a flowchart of all the Nvidia, OpenAI, Anthropic, like the circular investments, and it can generate you a perfect chart with the real numbers. Everything is coherent. The big deal with the image models is that this is a new source of demand. So you have the agents, the LLM agents that operate primarily through text on the web. That gets most of the focus, but content creation is such a massive vertical. Sora 2 launching a few months ago. You have VO. I'm sure we're going to get a new Google video generation model. This stuff is even earlier on the progression scale than LLMs. And I think there's honestly more room for content creation models, video and image models to play out and for people to adopt them in silent ways than the text models do. Because truthfully, most people don't have that interesting of prompts to ask ChatGPT. They kind of cap out on the capabilities that they need pretty early, but everyone loves consuming content. Sora had great success. I think we're going to see a lot more of that, and the models are going to keep getting better.
Interesting. So why is Warren Buffett buying Google? Is it because he thinks this new Gemini Pro, whatever, Nano Banana thing is great? Or is there something bigger that I think maybe people aren't understanding about Google? Walk me through your guys' thinking around Google as an investment.
Maybe Warren Buffett idea of why it's good versus ours might be different, but I guess why we like Google, and Patrick and I have talked about this a lot, is because it really sits at like every layer in the AI stack, and you're kind of getting exposure to everything. So they have the TPUs, which is, the hardware side. So, that would be, I guess, competing with Nvidia. Like I said, this market's so big, it's probably not like a direct competition, but they own the hardware. They're doing their own hyperscaler deals. So, like we talked about last week, more pure play companies like a CoreWeave, they're getting their own compute. They have their own hardware. Then they have their own models, which, they can even custom at some level to try and run more efficiently on their own hardware. So they kind of control the entire stack. They have Gemini. They have all these different models that Patrick's talking about on the video side, image generation, robotics side. They have, the full Google suite of products like Google Docs, Google Calendar, Gmail, all this stuff, great source of data, a way to integrate AI into consumer facing apps. They have Google Search, which is now like integrating AI into that slowly. They have Waymo, which they own, which is like a huge autonomous driving platform. I think that was valued at like $50 billion. And they have, X thousand many cars on the road collecting all that data for autonomous driving. They're partnered with, a robotics company I've invested in called Optronic down in Texas, trying to make these full generalized humanoids. So I'm trying to think of, YouTube. So they basically have
YouTube, only the biggest social app in the world.
every single like stack of AI they're touching, and there's synergies within that, and also just like you're kind of getting exposure to everything.
Yeah. So simply put, Google owns the entire stack. If you think that this is a bubble, but you still want to kind of have exposure, Google to me seems like a solid flight to safety option to still maintain a bit of exposure. The big news with Gemini is that these models are trained and served entirely on Google TPUs. So they're not served and trained on GPUs. If you read the system cards for Nano Banana Pro and Gemini 3 Pro, they say right there, it's all served on TPUs. So they are a bit insulated from all of the other potential nonsense going on. They own the consumer distribution. There was a big update on that front with Gemini 3 Pro, where the AI search in Google now runs the full Gemini Pro model. And if you ask a question, it can generate charts and interactive graphs and everything for you. So we've seen from the earnings call from Nvidia yesterday that Meta is seeing improved ad conversions by adopting more AI in the pipeline. Google owns that entire stack too. So we'll see improvements there, I'm sure. Generally, it's just like all in one. So that's, I think, why investors love it.
We talked last week about the AI stack. So your data centers, your GPUs, your LLMs, and your models, all this kind of stuff, which, as we've just talked about, Google owns that entire stack, right? What we didn't really touch on so much, but I had a conversation with Salim for the podcast that we did earlier this week, and he was saying another way to invest in AI is look at sectors that are about to introduce AI, and it's going to completely like revamp or completely like change their processes or make their products way better. He's like, healthcare and medicine is one of them, right? Like you wouldn't think of that as a way to express your AI trade, but he's like, it's making the medicine so much faster, so much more accurate, so much better. And so he's like, there's a way you could express it. And so the interesting thing about that is Google has existing products, like you mentioned, Google Docs, et cetera. Add AI to those and they become even better products, right? Same with YouTube, same with their ad model. So they have not just the stack side of things, right? Of the like hardware and GPUs and all that kind of stuff. They also have a bunch of incredible products already today with probably billions of users that they're going to add AI to that just makes them way better products, way more profitable. So like it's kind of both sides with Google. They literally have the entire thing, which is pretty interesting.
Yeah, I think they approach this entire setup. Originally, when AI was dropping, OpenAI released the first few models that kind of broke through to the mainstream. People were grave stomping on Google, saying that they're screwed and search is over. Now it's clear that Google is in a position of extreme power where they're insulated a lot on the downside because they are already kind of the kings of a lot of these domains, but they have immense upside. Clearly, they know that there's immense upside because they're investing so much in it. But I really think that the downside is kind of covered with Google. Right. So I would be pretty happy if I was them.
All right, let's finish up with a video that, Duncan, maybe it was you who shared. I'm going to play this video, and why don't you walk us through why this video caught your eye and what our audience needs to understand about this.
Yeah, so this is out of Physical Intelligence, which is a company doing, kind of generalized models for robotics. And I think that, to what Patrick and I were talking about earlier, there's still so many untapped kind of sources for demand on the AI side. So, we all kind of know the chatbots. We're getting more familiar with, good image generation and video generation. And we can see those like clear applications into companies. Another massive source of demand, I think, is going to be, these robotic models called like VLAs, so like vision language action models. And basically this is, we've seen with like LLMs, like we said, in 2023, when they first came out, they were a toy. 2025, these things are, PhD level smart. And I think we're undergoing like, the same kind of exponential growth on the image models, the video models, and now like these robotic models. So this is an example of them training their new model using a bunch of different techniques. We can link this article in the show notes, but like reinforcement learning, teleoperation, like feedback from teleoperators to get to 95% success rate making coffees. And so basically we just watch it make the entire coffee, and 13 hours on their website you can go watch. But this is going to, I think, going to be the next leg of AI compute demand. When you see here the box is folding, so they've basically gotten like 95% or so on a bunch of like relatively simple tasks. But as you have Elon says billions of robots deployed in the world, you're going to have to train models for all those robots and then be doing the inference for all those robots. So if you look out like 10 years, I just think that, not only is this going to be a massive demand for compute, but this sector is also going to be huge. And we're really seeing it start to accelerate right now. The funding within the AI humanoid space is really hot. Eptronic, there's articles on them, raising $400-500 million at a $5 billion pre-money valuation. 1X is out to raise $1 billion at a $10 billion valuation. That's like the Neo robot that kind of blew up all virally over social media. Company in Germany, Robotics, is set to go raise $1 billion at $10 billion. I think like Tether was looking at leading that. So this space is now exploding and accelerating really quickly, kind of similarly to how we saw the OpenAIs and the Anthropics accelerate really quickly back a couple years ago, and now are some of the most well-known and largest companies in the world. So definitely think this is a sector to keep your eyes on.
One thing I want to add is that if you watch the video, you'll notice that this isn't a humanoid. Sometimes people make the bear case against humanoids that I'm going to buy this $100,000 robot that's going to like sweep my house or make coffees. These arms you could conceivably purchase for $5,000 or less.
Yeah, I saw a bill of materials for like not this setup, but a very basic arm setup that was like $1,000.
Yeah,
just like off the shelf components.
Last week, we people generally with AI and now also with robotics, they centered their bear case around like we're not going to reach AGI, or LLMs aren't going to reach AGI, or we won't get a general purpose humanoid. And I mentioned this last week where for a lot of cases, we don't need that. We don't need generalization. We're just going to train it on the tasks that we care about. We're seeing that on the LLM side with software agents and, going piece by piece, each vertical. We're going to see the same thing in robotics. If you own a coffee shop, you don't need the thing to be able to like drive a car or operate a forklift. You just need it to make coffees. And you could get that arm for, Duncan saying $1,000. And it comes with the software pre-trained where you can, easily add it on. So it's happening.
So do you guys think humanoid robots are still probably years away from being relevant enough and scalable enough, even manufacturing wise, to like actually use them in a lot of different places? This kind of like fits that in the foreseeable future until humanoid robots come in. And so any company really could buy one of these. As you said, it's 5,000. By next year, it'll be 3,000 and it'll keep going down and they'll get better and better. And so you can just have a bunch of these little arms basically like hooked up everywhere. And now so many companies can access this without needing to wait until a humanoid robot can do it all, essentially.
Yeah, I think there's just going to be a varying, there's so many use cases for something like this, depending on what the task is. So I think, AI robotics in general as a sector is going to be like massive. It's not just going to be humanoids. The benefit with the humanoid and why, some of the humanoid companies are trading at really, seemingly crazy valuations for companies who haven't generated revenue yet is because ultimately, everyone is working towards this whole like AGI or generalized model. So if you get to a generalized model and you can put it in a humanoid and it has like the intelligence of when you talk to ChatGPT, but also has an understanding of the world, it could literally do anything a human could do, which is the holy grail. But in the meantime, like Patrick was saying, we know for sure that you can train it to get to like a pretty high efficacy on specific tasks. So definitely these things could be, deployed in those narrower tasks right now with the correct training and save companies, billions of dollars. Also, a lot of the AI FUD is basically saying like, oh, we're going to replace human jobs like 1-to-1. And, it's going to be the end of the world. But if you think about, buying one of these arms for $5,000, $10,000, and then what that unlocks, replacing, like a full-time human, or like if you can do multiple shifts a day, like maybe 2 or 3 full-time humans, it just makes, new projects way more feasible. You can grow the entire economy by a lot versus having a direct 1-to-1 replacement. I think there's like 3.5 billion people who work in the world right now. So imagine a world where there's like 30 billion robots deployed. The economy is way, way, way better. And then for every, robot, or AI agent, there's like 1 human, and just like everything gets cheaper. Everything gets, more productive. So I think that's like what we're starting to see here.
Is there a index or an ETF or something where people can invest in the robotics trend? Other than like, I don't know, is it ARC or something? Or obviously Tesla would be your like actual way to do it. But how do you guys think about investing in this in the public markets?
This similar with, like OpenAI and Anthropic, like kind of those leading edge pure play companies in the space are all private. That's like Figure, Optronic, Boston Dynamics is owned by Hyundai. Agility is private. They're working with Amazon. This 1X company is private. The Robotics company is private. Tesla is like the real big one who's publicly dedicating a lot of resources towards humanoids. So it's a bit harder to get exposure. I'm assuming these companies will come public over time. But yeah, most of them are private right now.
Interesting. All right, well let's look to wrap up here. I don't know if there's anything else you guys want to share before we do.
Hopefully the market will bounce a bit, but I think people who are scared of kind of like the underlying like whole idea that this is a bubble is just like not really true. If you just spend some time thinking about it, the prices are going to do what the prices do, but the long-term trend is still, very much intact.
Yeah, couldn't agree more. We started off the day. I mean, so this is Thursday. We're recording. You guys listening will hear this on Friday. But we started off the day in the green. It looked like everything was just about to go back to the moon, and we were like, "Okay, AI bubblers, you're cooked." And then I don't know what happened, but at some point, just before we started recording, everything just went nuked. So I think Nvidia lost everything that it had gained from its earnings call. So who knows what's going on? But I completely agree. The trend looks like it's fully intact. So all right, everyone, thanks so much for joining and listening in. We'll see you guys in the next one. Duncan and Patrick, thanks for joining in. Great to get your guys' insights. We'll see you all next week.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show's for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.